The large and mid-cap fund category is a great way to get exposure to some of the biggest Indian companies that are listed on the exchanges. Today, we'll be discussing this fund category and also the Kotak Equity Opportunities Fund. I have with me Harsha Upadhyaya, the Chief Investment Officer for Equities with Kotak Mahindra Asset Management Company Limited. Hi, Harsha. Let's start off by giving our viewers an introduction into this fund category, the large and mid-cap fund. As per the SEBI mandate, what kind of stocks is this fund allowed to invest in?
Clearly, this is a category where regular investors can take exposure into both large cap stocks as well as mid cap stocks. As per the mandate, one needs to invest at least 35% each in large cap category and mid cap category. The rest of the money can get invested anywhere. It can be either in large or mid or even in small cap category. So the only restriction is minimum of 35% needs to be invested in large as well as in the mid-cap stocks.
Now, Kotak's fund in this category is the Kotak Equity Opportunities Fund. How do you go around picking stocks within the basket and within the SEBI mandate that provide the best possible wealth creation opportunities for investors?
Clearly, if you look at the portfolio today, it has a tilt towards domestic businesses. And the reason is very simple. Domestic growth has been much stronger as compared to global growth, and also it has been more resilient compared to global growth. From a domestic growth perspective, we continue to remain more positive on the cyclical sectors as compared to consumption sectors. As we all know, the consumption sectors continue to remain weak because of rural demand and the mass market demand remaining weaker compared to urban demand. Within the domestic cyclical segments, there are several sectors which are expected to do better than the average market earnings growth over the next couple of years. For example, we have been taking overweight exposure to industrials, auto components, cement sector, and also chemicals. So these are some of the industry segments which are expected to grow better than the average market earnings growth. And that's where we believe over the next couple of years, still more wealth can be created. So that's the tilt of the portfolio at this point of time. So once the fund has a thematic overlay of top-down sectoral analysis, and also the bottom-up opportunities are found out in those particular sectors. So the opportunities can come from either the large caps or from the mid-cap segment. Currently, if you look at the overall exposure, nearly 51-52% is in large cap stocks and about 40% is in mid cap stocks in this particular fund.
Now, Kotak's fund in this category is the Kotak Equity Opportunities Fund. How do you go about finding opportunities, as the name suggests, within this large and mid cap basket?
Most regular investors can look into taking exposure into this fund because it gives you exposure to large cap stocks as well as mid cap stocks in a single fund. And also the ratio, as I mentioned, can be almost similar to each other. So to that extent, it's a well diversified exposure into both large caps as well as mid caps. And generally for equities, the longer the better in terms of the investment horizon. But I would say at least 3 to 5 years is what one should be looking at when one is entering into this particular fund.
Thank you, Harsha, for that. That's, of course, an introduction into the large and mid-cap fund and the Kotak Equity Opportunities Fund. Log on to www.kotakmf.com for more details.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.